Here's what nobody's telling you about your 2025 tax return, and it's costing retirees thousands of dollars they could be keeping in their pockets. Right now, as I'm talking to you, there's a brand new IRS rule that just went into effect, and it lets seniors aged 65 and older claim an extra $6,000 deduction for individuals and $12,000 for married couples. This isn't some complicated loophole or gimmick. This is real money that can stay in your account instead of going to Uncle Sam. But here's the kicker. This deduction is temporary. It only runs from 2025 through 2028, which means you've got 4 years to take advantage of this before it disappears forever. Now, I know what you're thinking. There's got to be a catch. And you're right. This deduction starts phasing out if you're a single filer making over $75,000, or if you're married filing jointly making over $150,000. The beautiful thing? This stacks on top of your regular standard deduction and the existing senior deduction. We're talking about a married couple potentially shielding nearly $47,000 from federal taxes. That's not small potatoes. That's real financial relief for folks on fixed incomes watching their dollars disappear to inflation and rising costs. Now, listen to me closely, because what I'm about to tell you is going to impact every single decision you make about your retirement income for the next 4 years. This deduction isn't just some accounting trick that saves you a few bucks here and there. We're talking about a fundamental shift in how your retirement income gets treated by the federal government. And if you don't understand exactly how this works, you're going to leave thousands of dollars on the table. First things first, you need to understand that this senior bonus deduction is completely separate from everything you already know about the standard deduction. For years, if you were 65 or older, you got a little extra bump in your standard deduction. That still exists. That hasn't gone anywhere. What's brand new is this additional $6,000 deduction that literally just appeared this year as part of the One Big Beautiful Bill Act that was signed into law back in July. And here's what makes this absolutely revolutionary. It's available for both itemizing and non-itemizing taxpayers. Read that again. This means whether you're taking the standard deduction or whether you're itemizing every single medical expense and charitable donation, you can still claim this $6,000 reduction in your taxable income. That's unprecedented. Most deductions make you choose one path or the other, but this one works no matter which route you take. Now, let me paint you a picture of what this actually looks like in real numbers, because I want you to see the full scope of what's happening here. Let's say you're a single filer who's 65 years old. In 2025, your standard deduction is $15,750. That's the baseline that every single taxpayer in America gets. But because you're 65, you get an additional $2,000 tacked on top of that. That's the existing age-based deduction that's been around for years. And now, assuming your income is below that $75,000 threshold, you get to add another $6,000 from this new senior bonus deduction. Add all that up, and you're looking at a total of $23,750 that gets completely shielded from federal income taxes. Think about that for a second. If you're receiving Social Security benefits and maybe pulling a little bit from your IRA or 401k, nearly $24,000 of that income is completely tax-free before you pay a single penny to Uncle Sam. For married couples, the numbers get even more dramatic. The standard deduction for joint filers in 2025 is $29,200. Each spouse who's 65 or older gets an additional $2,600. So that's another $3,200 if both of you qualify. Then you add the $12,000 senior bonus, $6,000 per spouse, and suddenly you're protecting over $46,000 of your retirement income from federal taxes. $46,000. That's not small change. That's serious money for people who are trying to make their retirement savings last 20, 30, maybe 40 years in retirement. But here's where people start making mistakes. And I see this all the time. They hear about a new deduction and they assume it's automatic. They think the IRS is just going to magically apply it to their tax return without them doing anything. That's not how this works. You've got to actually claim this thing, and you've got to do it right. The good news is that the process isn't complicated, but you do need to know what you're doing. The bonus tax break for seniors doesn't require itemizing your deductions and can be claimed as part of your Form 1040 or 1040 SR. Form 1040 SR is the senior-specific version of the regular 1040, and it's got bigger print and clearer instructions specifically designed for folks over 65. When you fill out that form, you're going to check the box that indicates you're 65 or older. That simple check mark triggers a whole series of calculations that the IRS uses to make sure you get every dollar you're entitled to. Now, here's something critical that a lot of people are missing in all the news coverage about this deduction. This isn't permanent. This deduction is temporary. This new deduction is effective for 2025 through 2028. And unless Congress comes back and extends it, it's going to disappear after you file your 2028 taxes. That gives you 4 years, 4 tax years, to take advantage of this. 2025, 2026, 2027, and 2028. That's it. After that, unless something changes in Washington, this benefit goes away. So if you're on the fence about making financial decisions that could be impacted by this deduction, you need to be thinking in terms of a 4-year window, not some indefinite future. Let's talk about the income limits, because this is where things get a little bit tricky, and where a lot of people are going to find out they don't qualify for the full amount. The deduction starts to phase out based on your modified adjusted gross income, or MAGI. For single filers, that phase out begins at $75,000. For married couples filing jointly, it starts at $150,000. Now, what does phase out actually mean? It means that for every $1,000 you earn above those thresholds, your deduction gets reduced by $60. Do the math on that, and you'll see that if you're a single filer earning $175,000 or more, you get nothing. Zero. The deduction is completely gone. For married couples, it disappears entirely at $250,000. This phase-out structure is designed to target the benefit to low and middle-income seniors, which honestly makes sense from a policy perspective. If you're pulling in $200,000 a year in retirement, you're doing pretty well, and probably don't need as much tax relief as someone living on Social Security and a modest pension. But here's what's interesting about the way this is structured. Your income matters in terms of how much of the deduction you can claim, but it doesn't change the fundamental fact that this deduction exists separately from your standard deduction. Even if you're in that phase-out range, every dollar of the deduction you can still claim is money back in your pocket. Now, let me address something that's causing a ton of confusion out there. And I want to clear this up right now because I'm seeing it all over social media and in conversations with people who are misinformed about what this deduction actually does. There's this rumor going around that this deduction eliminates taxes on Social Security benefits. That is not true. Let me be crystal clear about this. The bonus deduction doesn't necessarily eliminate taxes on your Social Security benefits. What it does is reduce your overall taxable income, which might indirectly reduce how much of your Social Security is subject to tax, but it doesn't change the underlying rules about Social Security taxation. Those rules are still in place. If you're single and your combined income, that's your adjusted gross income plus half your Social Security benefits, exceeds $25,000, or if you're married filing jointly and it exceeds $32,000, a portion of your Social Security is going to be taxable. This deduction might help lower that taxable amount, but it's not a magic wand that makes all Social Security taxes disappear. If you're 65 or older and your income is below those phase-out thresholds, you need to be claiming this deduction. It's real money. It's substantial savings. It's a benefit that Congress specifically created to help seniors manage the financial pressures of retirement. Take advantage of it while it's available because remember, it's only here for 4 years. Don't let this opportunity pass you by. Your future self will thank you for every dollar you save.